Hey, what's going on, team? It's Ricky with TechBit Solutions. Hope that you guys are all having an amazing Sunday. So this is our Sunday Stock Talk. I host one of these live streams every single Sunday at 6:30 p.m. Mountain Standard Time. If you guys ever want to tune in, I upload new videos every single day. Please make sure you smash that like button, and of course, consider subscribing if you feel like we earned it. So let's go ahead and just get right into it. We're going to be breaking down the top 10 stocks that you guys all see value in. Literally, all I ask you to do is, if you want me to break down your top stock, share it in the live chat. Please don't just share the ticker symbol. Share why it is that you see value in it, where you plan to buy, where you plan to sell, where you plan to cut losses, some form of trade plan that it at least gives me some insight that you've taken time to actually plan out that trade, and it's not just something that you just want to throw at me. So again, let's go ahead and jump right to it. I'm going to start sharing my screen so you guys can see exactly what it is that I'm looking at. As of right now, the NASDAQ market is still in the red. Last time I looked, it was down 0.5%, meaning that SQQQ should be up 1.5% if the market were to open as of right now. At this point, or what I'm trying to say, is that markets are in the red. On Friday, it was a bloodbath. Markets were in the red. It started off not so much like that, but it just continued to take over, right? So we're at highs of $45. It looks like it's going to be another bullish day for SQQQ. One of the things that I want to make you guys aware of is please right now share your top stock. But one of the things that I want to make you guys aware of while we're prepping for the week is that this upcoming week is a big earnings week. So if you guys look at all the different companies that are reporting earnings this upcoming week, from the 25th to the 29th, we have Coca-Cola on Monday. I mean, that's much more of a lighter start. But we have Google, Microsoft, General Electric, Visa, General Motors reporting earnings on Tuesday, right? On Wednesday, we got Facebook, Boeing, we got Ford, PayPal, Qualcomm. So again, Spotify, really big tech. And then on Thursday, we got Apple. They have the largest market cap for companies that are publicly traded. Amazon, huge company. Intel, Twitter, McDonald's, those are all on Thursday. And then on Friday, we have ExxonMobil, and a lot of the oil companies. So you guys can kind of go down the list. This upcoming week, we will either see the market bottom out and really, depending on how these companies begin to report. My concern is not even so much tomorrow. It's more when the big tech stocks begin to report earnings on Tuesday, Wednesday, and Thursday. I think those 3 days are going to be like the big deciding factors on how aggressive the market's going to either sell off or potentially recover. So my job is just to make you guys aware so you guys can take time to prepare. It's not to instill fear, but at the end of the day, if the markets continue to sell off, if you're a long-term investor, that's great, right? Deals are among us. The question that you should ask to yourself is really, can you tolerate the time that it will take for these markets to recover? These markets do not have to recover right away. They don't need to recover anytime soon. So with that being said, don't put yourself in a position that you cannot tolerate. I don't want to hear that you're going to buy the dip, but then if the stock keeps dipping, that you become an emotional and irrational mess, right? The whole idea of trading and investing is to put yourself in a position not only to succeed, but in which you can tolerate even at worst case scenario. So please do your future self a favor and don't just trade or invest because you can, but do it because it makes sense. So let's go ahead and go right to it. Again, if you guys want me to break down your stock, just please share it in the ticker call out format in the live chat. So we got BBIG. So let's go ahead and break this one down. So BBIG on the 4-hour time frame, we can see lower highs and lower lows. Direction's not in my favor. There's 3 main criteria that I personally like to focus on, and that's both with trading and or swing trading. Direction, I like when direction's in my favor. Overall big picture, if direction's in my favor, it's much easier to make money. It's still not easy, but it's much easier. When direction is against you, when something is continuously selling off, it's bearish. It's not impossible to make money. You're just making it more difficult on yourself. I like to focus on at least confirmation or indication of an uptrend. And then the last thing is the risk to reward ratio, making sure that there's enough enough margin for me to walk away with some profit, right? I see why you're paying attention to it, just because it's a little bit more on the oversold side. I would completely ignore this because of how bearish it is. It just would not meet any of my criteria. Let's go ahead and break down NVIDIA. So I'm actually very happy that you brought up NVIDIA. If I'm not mistaken, NVIDIA already reported earnings. It's already dropping, and again, if the market continues to drop, so will NVIDIA. NVIDIA, I do agree with you, is very, very oversold based off of previous performance. These are the type of companies that I can really see 1 year from now, people looking back and be like, hey, NVIDIA at $196 was a steal, right? Look at its previous performance. Look how bullish it's been. Look how consistent it's been. Yes, right now it's in a rut. So is everything else, right? The market's kind of just struggling. With that being said, I feel like if you can ask yourself and really make sense of it, if you can tolerate the time that it will take for this stock to recover, I think that NVIDIA is definitely a stock worth learning more about. Potential upside based off previous highs is 76%, even if you capture half of that, right? There's no such thing as a perfect trader. There's no such thing as a perfect trade. There's so much upside on this, but direction simply is not in our favor. With that being said, if you decide to take a position, you have to understand that it's going to take time for the stock to recover, and you can't expect that to happen anytime soon. If you can't tolerate a stock pulling back, then I would completely ignore NVIDIA as of right now, as direction simply not in your favor, right? It's making lower highs, lower lows, and you still need to have some form of criteria when it comes down to initiating your trade. And because it's still selling off, you know what I have to say? Let it bleed. The cheaper it gets, the better, right? The better price that I can get it for, and the more that I can load up on. So allow it to bleed, allow it to sell off. But if you're not going to buy a position now, then you need to make sure that you're alerts and that you stay active with this in your watch list. So I really do appreciate you sharing the video with me. I think it's, if I'm not mistaken, one of the market leaders in its niches, right, for micro device manufacturing. So AMD and NVIDIA, I think, are killer companies. I think 3 to 5 years from now, they're already killing it. I think 3 to 5 years from now, they're only hopefully going to continue to grow in value. So we'll just have to follow up and see. So Twitter, a lot of people asking about Twitter. I think I'm going to have, I was going to make a video about Twitter. I don't know if you guys would want me to. I don't feel like my opinion is going to be the same as many other people. I think Twitter is completely hyped up right now. I think that there's huge red flags with its current volume. I think it's extremely hyped up. I think it's extremely overvalued. I think that because it will fall through. Not only does Twitter report earnings this upcoming week, so just a little heads up for those that didn't know, Twitter reports earnings. Let's see if it actually pops up. I think it's Thursday. Let's see. It doesn't say right now, but I'll have to double check, but Twitter does report earnings this upcoming week. With that being said, it's not going to be surprising that if it drops like every other social platform as of right now. And the only reason that it's trading up here is because of Elon. They're not going to work with Elon. We know that they're not going to sell it to Elon. That's only going to bring the price down. I think that all that is happening right now is kind of like, it's just hype. Just like AMC, just like GME, just like every other pump and dump, they push up for a short period of time and then they return back to their previous state. Bearish. It's not that I don't think Twitter can recover. It's that it pushed up so quickly within a short period of time that it's only a matter of time for it to pull on back. Now, if they accept Elon's offer, that's a different story. The hype continues, right? And then the rally will continue. But with that being said, it would not surprise me if Twitter returns back to $35 price points. Alrighty, so let's go ahead and break down the next one. So COST, so this is Costco. Costco is actually a very popular stock that we were talking about earlier this year. Costco sold off. This was also, right, not a lot of people talk about Costco because it's not the most attractive company, right? Costco is where you keep the cost low, right? I don't know who has a Costco membership. I do, right? And I think one of the amazing things that I like about Costco is its stock performance. It's not a flashy company. It's not a super innovative company. It's just a good quality, consistently bullish company, right? It came from highs of 612. It's now pulling back. It's testing EMA. Last time, I don't know if you guys remember, we talked about it when it was trading below $500. Not only did it recover, but ended up making new highs. Again, this is kind of what I see when I talk about NVIDIA and when I talk about AMD, this is the potential that I see with those companies, but more in the tech field. So therefore, I think that there's more upside or potential for ongoing growth with NVIDIA than normally I would see. I just feel like Costco is just a safer and a stronger bullish pattern, right? Definitely not as aggressive. But yeah, as of right now, definitely pulling back. Let it sell off. Let's see what the potential upside is, because it's pulling back right now to the moving average. Yeah, it's not crazy upside. 7%, right? As about probably 1.5% to 2% downside to the moving average. But as of right now, it's selling off. Let it bleed, let it sell off. The cheaper it gets, the better it is for us. But once it begins to indicate signs of a reversal, so that's like this, right, where it breaks above EMA, begins to indicate signs of an uptrend, then that's when you can choose to step on the gas. Because why? Because direction's in your favor. But yeah, Costco, I definitely think, especially for our long-term investors, I think it's a company worth adding to your watch list and worth learning more about. It's not a crazy, lavish, innovative company. It's just a bullish company, and sometimes something that's consistent can outperform things that are extremely innovative and that are just lacking overall, consistency. So, alrighty, let's go ahead and move on to the next one. So we got Shopify reports earnings this upcoming week, if I'm not mistaken either. Here we go. Actually, no. Shopify already reported earnings. My bad. Spotify is the one that's reporting earnings. I always get confused with that. Shopify has really been lacking as well. It was previously very, very bullish. It hit highs of 1,700. Right now it's trading at lows of 459. I would be very careful with this, because although we do think that it is very cheap, we do know one thing. It is very consistently bearish. And with that being said, the more it sells off, the better at this point. It continues to get rejected by the moving average. Yes, sometimes it does find a support. It breaks above EMA, and then it gets rejected once again, and then it sells right back off. It's up to you. If you want to force a trade on something, then sure, choose to trade Shopify. But as of right now, I see there to be no reason to try to force an entry in something that's been selling off for all this year, right? And the better later half of last year. So I say let it sell off, set your alerts for the break above the moving average and or the EMA. And I think that once we actually begin to indicate signs of an uptrend, yes, you might miss out on that little portion, but guess what? We have this huge chunk to recover, right? So let's not be greedy. Let's not be picky like, oh my God, I want to catch it at the lowest price point. Why? It's been selling off for 5-6 months. Why would you want to try to catch a falling knife? Allow the opportunity to present itself. Let's stop trying to force our trades. I know I'm not just speaking for myself, but this has to make sense to all of you guys, right? I know I've made that mistake many times. I'm no excuse. I know that it happens all the time where we force a trade when we know direction's not in our favor, and it's just because we want to. And when we break those rules, we end up, following up with consequence. So, alrighty, let's go ahead and break down SQ. So I believe we broke down SQ last week. As of right now, it's still selling off. Everything tech is most likely going to be selling off according to last week and probably this upcoming week. I would say that this is a very similar setup to Shopify, where it was performing previously very strong and it's been struggling ever since then. So I would say the same thing with this. There's so much upside that there's no reason to rush an entry with this. If you see value in Square and you think that it's bound to recover, set your alert and just follow up with it. No reason to overcomplicate it. Let's go ahead and move on to another one. I want to break down one maybe that we haven't broken down in a while. So SUNR was bullish, lower highs, lower lows, consistently selling off. There's nothing about this that, and it looks like a hyped up stock. It looks like it got hyped up to about $100 a share, and it's been selling off ever since. Lower highs, lower lows, complete bearish pattern. If there was a perfect setup of what a stock would look like for a stock for me to not invest in, it would be something like this. I'm not joking. Where it gets hyped up, and then ever since then, it just makes lower highs and lower lows. You're just making it more difficult on yourself. When direction is not in your favor, you're literally just making it more difficult for yourself, because your entries and your exits have to be that much more perfect and effective. And that's just That's just not very realistic, especially when you're just getting started. All right, Exxon, let's go ahead and do that. We're actually going through these pretty quickly. So how many have we broken down? We did 1, 2, 3, 4, 5, 6, 7, 8. All right, let's keep breaking them down. Again, if you guys want me to break down your stock, make sure you destroy that like button and make sure you share it in the live chat. So we got ExxonMobil's, if I'm not mistaken, they do report earnings this upcoming week. They report earnings on Friday. So 429, please make sure that you're aware of that. Overall, very bullish pattern, hitting highs of $90 a share. Pulling back as of right now, doesn't surprise me, right? As oil prices are going up. I think it's going to be really interesting to see because everyone's like, oh my God, all of these oil companies are making so much money as gas prices are going up. I don't necessarily think so, right? Just because gas prices are going up, it doesn't mean that their margins have increased because their costs have probably gone up as well. Something that not enough people take time to think about. They just like to quickly judge. So I think that on this Friday, once we get a better and more in-depth look on what their actual margins looked like for the first quarter of 2022, I think it can give us some better insight of, hey, have we peaked for oil and are we pulling on back, or is it something that we potentially continue to see signs of an overall uptrend? So I think this earnings will actually be very important to see if we see a big shift of direction for ExxonMobil. But yeah, rightfully so. It's been going up as oil prices have been going up. So no surprise there. If this oil hype ends up dying out and or if we find a solution for our lack of supply, then I can see ExxonMobil and all the other oil companies quickly begin to retract. So please make sure that you're aware of that. Understand why they're up so much. Understand that if there's a solution for our lack of supply, then these stocks will most likely correct themselves. So ABBV, what's going on, Armando? ABBV. Hope that I earned your thumbs up on this one, buddy. Here we go. ABBV. I like this one. So overall, very consistent overall uptrend on the 4-hour time frame. We can see this a little bit more clearly. It's not something that offers crazy margin, but I like that you're talking about this because it recently pulled on back. Testing support at the moving average. I would set an alert for the break above the EMA line. And then we can choose to follow up with it. So this thing has about 13% upside, but again, we can wait for confirmation. Wait for the break above the EMA line, wait for either some signs of a support. It would just suck for you to buy right now, thinking that it has to recover, and then it just continues to sell off. Sometimes doing less is actually better for you as a trader when you're just getting started. Set an alert, learn the importance of waiting for proper confirmation, and then we can go from there. So let me go ahead and break down 2 more stocks. And I would love to kind of end it there. So I'm excited for this upcoming week. I don't have any super high expectations. I know a lot of people were freaking out on Friday and on Thursday, and rightfully so. The market was selling off. I view it as a sale. This is one of my favorite times to trade. This is one of my favorite times to invest because there's deals that are among us. It's all about perspective. Some people freak out. Maybe they didn't prepare. Other people buy, right? Because they make money on the recovery. So I'm very excited to follow up and see how the market ends up performing this week and the weeks that follow. So we got Michael Nguyen with AVAX. Michael, I appreciate you being one of few. And actually, what the heck? Wait, is AVAX AV? Did I? Is this a crypto? No way, right? I was like, I appreciate you posting that in the ticker call out format, but I don't know if you typed that one in correctly. Oh, no, I don't trade crypto, homeboy. Yeah, there's really not much that I'm going to be able to help you with on this one or be able to be of assistance. So VSTM, what's going on, Ismail? So VSTM, here we go. Super low volume. Looks like all of a sudden it's beginning to pick back up. Looks like it gets manipulated from time to time. Again, huge red flag, overhyped up, bearish manipulation. I just want you to look out for yourself. And when there are these, the question shouldn't be, can I make money on this? I mean, you can make money doing anything, right? The question you should always ask yourself is, does the reward outweigh the risk? And in my opinion, it's very easy to see that it's a no. Ask yourself every single time that you're about to do something in life, especially when it comes down to trading, does my reward outweigh my risk? And start laying it out. Well, what's my potential upside? Well, what's my potential downside? You will become much more disciplined and have a reason why behind what you do if you approach your trading in that same sense. Have an intention behind everything that you do. So let's go ahead and break down the next one. So SOFI had a previous support level that was pretty consistent. It's been selling off ever since. Let's go ahead and look at the day chart. Lower highs, lower lows, getting rejected very strongly off of that EMA line on that day chart. And because of that, I just, I agree. SOFI is super, super cheap right now. It's just, why would I want to add or buy something that's consistently losing money? Almost, right? What is that? For about 6 months, 7 months, it's been selling off. It's just not worth it. It's not worth it for me, right? So I can set an alert. We can wait for confirmation. Other than that, I think it's safe. It's a more safe play to just set an alert and then follow up with it. Alrighty, let's go ahead and do, I want to end with a good one. So, alrighty. So on the day chart, looks like we're seeing a lot of consolidation here on the 4-hour time frame. I can see that this thing has super low volume. I personally would not trade this just because of how low the volume is, and there's no clear direction, right? This is for the past couple of months. We haven't really been going up. We haven't been really going down. It just kind of consolidates. Again, another red flag. The whole point that we try to put money in the market is to try to make money. And if something isn't showing signs of a clear direction, either uptrend or downtrend, then why have money just continue to, teeter-totter between a break-even or a small net gain or a net loss? It just doesn't make sense, right? Look out for yourself. Be okay with being selective. More now than ever before. As the stocks are all beginning to pull back, this is your time to shine. You don't need to buy 10 different stocks. Right? We're talking about 10 different stocks as of right now, just so you guys can see how other people see value. But just imagine right now, as all the markets are pulling back, you pick 1 or 2 stocks that you buy and that you invest in and that you hold as they recover. But you need to make sure that they're the best stocks out of everything that you've gone through, right? How was it previously trading? Why is it that it's sold off? Is it something that's going to continue to bring it down? Is it beginning to indicate signs of a support or a potential reversal, right? What's the upside versus the downside? Begin to ask yourself those questions. So let's go ahead and do Visa, because Visa actually reports earnings this upcoming week. So if I'm not mistaken, they report earnings on Monday, right? Is it on Monday? I believe so. Or on Tuesday. Alrighty, but as of right now, it looks like we peaked at 252. We're getting rejected off of this moving average, and as of right now, it is pulling on back. If I'm not mistaken, Amex did report earnings, and Amex is AXP. Is it not? American Express? Yeah, so AXP, nice little pullback from previous highs. Overall, banking has been doing just fine based off of previous patterns, and it still has that same resistance level. So based off of its performance for Amex, it's just, I would say, market sentiment is bearish as of right now, and it wouldn't be much of a surprise if we begin to test those 190 support for Visa once again. We're trading below the moving average, so we are getting rejected as of right now. It's not like you're missing out by not being invested in Visa. So if you do decide to buy the dip, just do it with a position size in which you can tolerate. It's not like Visa is a super safe play right now, right? Visa is not making higher highs and higher lows like it used to. It's a little bit more risky. Direction's a little bit more unclear. It's not that you need to be scared. It's that you just need to be careful, right? You need to be selective. And I think that's where it necessarily comes in. That's what I'm most excited about. I'm really interested to see how you guys perform under pressure for this upcoming week. The reason I say that is that there are so many of you that are looking at so many different stocks. And guess what? How many of you guys have ever done this? I want to see a show of hands in the live chat. How many of you guys sometimes get so overwhelmed because of all the different stocks that you're adding to your watch list, all the different stocks that are reporting earnings, all the different stocks that are selling off, that all of a sudden, when the stocks begin to recover, or the markets begin to recover, you don't even like get invested in anything. You end up missing out on the entire recovery. I see so many beginner traders make that same mistake over and over and over again, where I'm tired of it, right? I want you to look out for your future self. You need to learn from your mistakes. We're not here to be perfect, but we're here to learn to be better than what we were last time, right? So please understand that you don't need to be invested in all these different stocks. You can just pick 1, 2, or 3 different companies that you actually value and just add those to your watch list. Don't overcomplicate your trading. Keep it simple and make sure that it meets your criteria. I just want to make sure that, as the market's selling off, it does suck. But it sucks for those that did not prepare. Because for those that did, we can buy up at these oversold levels and make money as the market recovers. And that's what I'm most excited about. So I will see you guys tomorrow in my live trading session. I don't know if you guys have ever seen me trade live, but I would love to have you guys. I trade live every single morning with my Learn Plan Profit group. And if you guys want to join, you guys can click the second link in the description, and that will send you on over to my Learn Plan Profit 2.0 lesson library. I do exclusively only work with this team. Do you have to join? No, right? You can learn how to trade 100% on your own. The question that I would begin to ask yourself is, how much money will you lose on your own before things actually begin to click and make sense? And would it have just been more efficient for you to have learned through a structured lesson library? Only you can answer that question, right? So if you think watching me trade live every single morning would be of value for you, then again, we're running our sale, $100 off the Learn Plan Profit 2.0 lesson library. And again, I trade live every single morning, Monday through Friday. As long as the market's open, I'm there. So again, if you guys want access to everything that we include within Learn Plan Profit 2.0 and you guys want it for $100 off, then that second link down below, you guys should be able to see it. If you don't, refresh your screen. Second link in the description should be $100 off, and I will see you guys tomorrow at Market Open for our live trading session. I wish you guys nothing but the best. Continue working hard, continue following dreams. Let your passion be what drives your success. And like always, let's make sure that